Every year or year and a half, the world is going through a transition wherein a new war is coming onto the plate.
Yeah.
Okay, I thought Russia-Ukraine war will impact the market. It has done to some extent. Again, it didn't. It came to silent mode now. Again, now US-Iran is onto the plate. Again, the market is focused.
Yes.
Now I have all my education things done. I have the knowledge, but again, how to handle that market volatility is the question. To add the question, how can I maintain? The summary of the question is how can I maintain war-proof portfolio is the question.
Like all other wars are different. Now whatever happening in the Gulf, this war is different. Why? Because it's because of the crude oil.
Yes.
India is the largest consumer, one of the largest importer of the crude oil. So almost more than 85% we import, and we depend on the transit.
Yes.
Of the ships,
Yes.
which are passing through that.
Persian Gulf.
The problem now is this war is created is not the war actually, it's the problem of crude oil. And that is the reason Iran is playing all these things by keeping that particular strait into their hand. So now, how it is going to impact Indian economy is that is going to be seen in the next quarter, not this quarter, because this quarter Q4 is over in March and results are coming now. But Q1 of 2026-27, that is more important because this impact of the shortage of crude oil and the prices effect on the industries, this is all is going to reflect in the next Q1 results. So there. And in any kind of war and any kind of war, what kind of portfolio that you need to build is basically companies which can take shock. That means, first of all, debt free and also cash rich. These companies, so even in the COVID also it happened same thing. People who survived, they are cash rich. That means they can spend 6 months without money. But a lot of companies, they cannot. Their performance will go down and immediately a lot of raw material issues will come up and their entire profitability will go down. So whether these particular companies have got the pricing power, they can actually increase the prices, still people buy, number one. Number two, whether they are cash rich or not. And third one is that they are not sensitive to these fundamental aspects.
Yes.
Suppose for example, what are the sector you had? FMCG.
Yes.
Major effect will not be there. It's a regular thing and small inflation will go up, but still people are ready to buy at higher price. Nobody can stop eating. And food and other industries. Like that, this particular domestic consumption based industries are going to have more this thing. So when you select a portfolio, these are the main criteria, which will not have direct impact of this fundamental what is happening around the world. That means crude oil effect will not be there. Suppose for example, crude oil effect will be there on the main stocks. We don't pay. It's a raw material is crude oil. Like that, transport companies, like that logistic companies, everybody will have this impact. But still in India it is not been seen because government still keeping the rates down. But once like it has to be passed to the consumer, then obviously if companies are not able to charge the consumer, those companies will take a hit of their profits. Obviously they will not be profitable, obviously performance will go down. So we have to be very careful when we decide a portfolio. These three things are important. Like you asked, war proof. First of all, companies who can take shock, still sustain. And companies who are very cash rich and sustain even if they don't have business for some time or they have a problem for some time. And then the companies which will not have major impact of this particular scenario. So these three kind of companies we need to select and build the portfolio which actually can perform even in the worst conditions.
Okay.
So that's how you can actually build a war-proof portfolio.
Thank you.